This is one of the best trading indicators on TradingView. It provides high probability entry points with minimal lag and the potentially accurate exit points to secure maximum profit. It has an acceptable win rate if only used correctly. Overall, this is one of the most advanced trading indicators I have ever seen, unlike so many fake ones. You need to watch this video to understand how practical and powerful this unique indicator is, so I won't waste any more time and will present it to you right now. To add this indicator, just head over to the Indicators tab and type in Regression Indicator, which is written by Big Beluga, and click on it. Once you do that, it'll instantly appear on your chart in its default form. Now, this indicator has two main parts. First, you've got the regression line. This is the trend following line that shows you the overall direction of the market. At the end of it, you'll notice a small arrow that points out the current price direction in real time. Second, there is the oscillator. This one is based on volatility, and it is designed to spot potential reversal zones, giving you an edge in timing your trades. Once this indicator is on your chart, just double-click on it in order to open the settings. Under the Inputs tab, you'll see three options: regression length, regression normalization, and signal length. The first two, regression length and normalization, are the most important ones. You'll need to adjust these values depending on the specific market you're trading. For example, I've set the regression length to 600 and the normalization to 200. I believe this setup works really well on EuroCAD 1 hour time frame. In the Styles tab, there isn't much to change. Personally, I just uncheck a few extra items to keep the chart clean and easy to read. Finally, this is the regression indicator we're going to use. So let's break down its different components and see exactly how it can guide us during trades. Right now, I'm looking at USD CAD 1 hour time frame. Notice this. When the oscillator is white and below the midline, it signals the market has bearish momentum. The candles confirm this too. The trend is bearish. The candles turn white and they start forming lower lows. On the other hand, when the oscillator moves above the midline and turns blue, it shows the market has picked up bullish momentum. At the same time, the candles shift above the regression line, turn blue, and begin making higher highs. So this pattern just keeps repeating itself on and on. Oscillator white and below the midline, bearish trend confirmed. Oscillator blue and above the midline, bullish trend is confirmed. Now let's actually use the attributes of this indicator to learn how to trade with it and see how useful it is when it comes to giving signals. In order to do it, we need to understand something called divergence. Take a look at this chart. The candles are blue and making higher highs, which is a clear sign of bullish momentum and an uptrend. But notice the oscillator. Instead of following along, it's making a lower high. This contradiction isn't just random. It's a signal that the current trend is weakening and that reversal could be near. This is exactly what we call divergence. Divergence is one of the most important reversal signals out there, and the best part is, it works across any chart and any time frame, giving us opportunities to catch reversal trades with confidence. Let me show you another example. In this chart, the candles are making lower lows, that is, a clear bearish movement. And normally, we'd expect the oscillator to follow in the same direction. But here's the interesting part. The oscillator is actually moving upward and forming a higher low. This contradiction tells us something important. A reversal is on the way. Once again, this is called divergence, a powerful signal that the downtrend is losing steam and a brand new uptrend is about to begin. As you can see, the moment oscillator turns blue, the reversal is confirmed. At that point, we can be confident the market has changed direction, giving us a solid opportunity to take long positions. One of the most important attributes of the oscillator during trades is the momentum shift. For example, the oscillator drops below the midline and turns white. That's a clear indication the trend is about to turn bearish. Now, if you check the candles at the same time, you'll notice something interesting. They're getting close to the regression line and they're no longer making significant highs. And most importantly, they have also turned white. All of this signals that the trend is weakening and a reversal is near. So knowing all this, when we finally see a breakout below the regression line, and it's the perfect time to take a short trade. Watch this one final example for yourself. So there's everything about this unique indicator. I truly believe that if you put in the time to work with it, it can make a huge difference in your trades. One last point you need to consider. I am not a financial advisor, and this is not a financial advice. All content, information, and opinions shared in this video are for educational and entertainment purposes only. Trading and investing in stocks, Forex, and cryptocurrencies carries a high level of risk, and you may lose more than your initial investment. Only risk the capital you can afford to lose. Past performance is not indicative of future results. Always conduct your own research and consult with a qualified financial professional before making any investment decisions.